Hi everyone, my name is Aisha and welcome to my channel where I document my journey towards financial independence. Today, I would like to share with you my process in building a Trading 212 pie. My first pie with Trading 212 is a real estate investment trust / property pie. At the end of this video, I will share with you the final percentage or slice allocation of each of the companies that is expected to give me a 10.79% average annual return. Before we start, I just want to say that I am fairly new in investing. If you see any mistakes in my pie building process later, please feel free to correct my mistakes in the comment section down below so everyone can learn from my mistakes together. If you find that my process is useful and it helps you in building your long-term wealth, I am happy for you. Please consider giving this video a thumbs up and subscribe if you haven't already. Thank you so much, and let's move on to the video. So this is how the Trading 212 interface looks like. Click on create a pie and start selecting the companies that you want to invest into. I am going straight to my watch list as I have placed my favorite companies under the diff stocks section. So the first company that I selected is Brookfield Property REIT, ticker symbol BPYU, and then Stag Industrial, followed by Tritex Big Box REIT. I continued to select Medical Properties Trust, ticker symbol MPW, scrolling down further to look for LTC Properties, Simon Property Group, and lastly everyone's favorite monthly dividend paying company, Realty Income, with the ticker symbol O. So now I have selected 7 companies in total. Just scrolling up to double check whether I've missed out on any companies. Pardon my silliness as this is my first attempt in building a pie and I did not know that I can just add on more companies later if I miss out anything. Then I click on the arrow. The current company selection and the slice allocation will be giving me approximately 0.73% annual return. That's quite low and cannot even beat the inflation rate, which is around 3%. So when you click this button, it will give you more information about what a slice is, and I can actually adjust it according to my risk tolerance. So I started playing with the slider. This may take a while, so I will speed up the process a little bit to save everyone's time. So this is me adjusting the slider to see the expected annual return. I am scrolling up and down because I didn't see that the expected return is actually written on the header, and I don't have to keep scrolling up to check the big circle. Please pardon my silliness again, and I promise the unnecessary up and down scrolling will stop pretty soon. So now we are at 3%, and after playing around with the BPYU slider, the expected return immediately jumped to 7%. So I continue to play around and it's now around 8.5%. I guess at that point of time, I was happy with the slice allocation and click next. In this section, you can choose how you want to invest into the pie. I chose manual investing and I can change this option later after starting to earn a more stable income. Then it's personalization time. At first, I named this pie properties and then change it to REIT. I also chose a building icon to represent REIT business nature. Now my pie is complete. So this is how the pie looks like. You can also set a goal and I just set to $5,000 first. Under the holdings tab, you can check and edit your pie and set auto invest in the auto invest tab. By now, you all should know that I am a very indecisive person, so of course I continued to tweak the pie even further. As of today, this is how the pie looks like and I am quite comfortable to continue investing according to this slice allocation. I decided to let go of BPYU and Simon Property Group. The first slice is Realty Income at 25%, Medical Properties Trust or MPW is also at 25% weightage, Stag Industrial at 20%, LTC Properties is at 15%, and lastly, Tritex Big Box REIT is also at 15% weightage. This allocation is estimated to give me an annual return of about 10%. The return from my initial pie just now was around 8.5%. Now, let's see a brief analysis of each of the companies in this pie. First is Realty Income. Realty Income is a real estate investment trust that has been paying monthly dividends since its founding a little over 50 years ago. This company owns around 6,000 properties all over the US, majority being retail properties, which takes up about 83% of the business portfolio. The 6,000 properties are leased to tenants in 50 different industries. In my opinion, this is a good business move because if one industry collapses for whatever reasons, Realty Income will still have 49 more industries to collect rental revenue from. Currently, the company is paying an annual dividend of $2.8 per share, which breaks down to around 20 cents per share per month. According to the Simply Safe Dividends website, Realty Income's current dividend yield is around 4.78% and the dividend safety score is around 70, which means the dividends from this company are safe and unlikely to be cut. This company is also emphasizing on dividend growth and has a compound average annual dividend growth rate of approximately 4.5%. The company's payout ratio is around 84%. Next is Medical Properties Trust with ticker symbol MPW. Similar to Realty Income, MPW is also a real estate investment trust, but they are paying dividends quarterly instead of monthly. This company owns medical properties like hospitals both in the US and outside of the US, such as the UK, Germany, and Australia. This is what attracts me to this company as the business revenue is diversified geographically. Currently, the company is paying an annual dividend of $1.08 per share, which breaks down to around 27 cents per share per quarter. The company's current dividend yield is around 5.9%. However, according to the Simply Safe Dividends website, due to the current global healthcare crisis, MPW's dividend safety score has been downgraded from safe to borderline safe, which means that there is a moderate risk of dividends being cut. The company's payout ratio is around 76%. Next, we move on to Stag Industrial. This company is a real estate investment trust with industrial properties such as warehouses, distribution centers, and light manufacturing facilities in their portfolio. Similar to Realty Income, this company also pays monthly dividends. I chose this company to diversify my portfolio and reduce risk just in case retail properties in Realty Income and medical properties in MPW fail. The company is paying an annual dividend of $1.44 per share, which breaks down to around 12 cents per share per month. The company's current dividend yield is around 4.41% and there is no information on the dividend safety score. The company's payout ratio is around 77%. As for LTC Properties, this company is a real estate investment trust which primarily invests in senior housing and skilled nursing facilities in the US. Similar to Realty Income and Stag Industrial, this company also pays monthly dividends. According to the Simply Safe Dividends website, senior housing and skilled nursing facilities should enjoy a higher demand in the future as the growth rate of Americans aged 75 and above will be more than double, reaching about 40 million people by the year 2040. In my opinion, this is a good investment as there will always be elderly people that require 24/7 care and housing. LTC Properties is paying an annual dividend of $2.28 per share, which breaks down to around 90 cents per share per month. The company's current dividend yield is around 6.55% and there is no reliable information on the dividend safety score. The company's payout ratio is around 74%. Lastly, Tritax Big Box REIT. This company is also a real estate investment trust, but unlike the last four REITs, this company is based in the UK, which primarily invests in large logistics facilities. I chose this company to be included in my portfolio for diversification purposes, geographically speaking. Tritex Big Box REIT is paying an annual dividend of around 6 cents per share, which breaks down to around 2 cents per share per quarter. To be honest, I am earning way more in capital appreciation than dividends for this company. The company's current dividend yield is around 4.17%, and there is no reliable information on the dividend safety score. The company's payout ratio is around 81%. REITs will usually have higher payout ratios compared to other industries. So, this is how my REIT pie looks like. All 5 companies are REITs, but I am trying to reduce any risk by diversifying the type of industry that these companies are investing into and mixing up REIT from the inside and outside the US. Please comment down below on what you think about this allocation and what I should do to improve it further. If you made it this far into the video, thank you so much. I really appreciate it. Don't forget to give this video a thumbs up and subscribe if you haven't already. I'll see you guys in the next one. Be safe out there and take care.